Oh, what's good? I just remembered that I have to film a day in the life thing for the next Fair Value Gap video. So here I am. This is going to be the start of the video. Intro. What's new with TJR? Whole lot of nothing. It's NFP week this week, so markets are pretty choppy. But if you look at market, it did exactly what we said in the past two videos, right? We had a sweep below the previous weekly low, and now we're pushing up. Yeah, I told you guys. I told you. Yeah, so that is what's happening right now. I'll go into it in the fair value gap trade. I'm not going to like film the chart work portion of it. I'm gonna wait until our fair value gap that I marked out on the daily time frame gets filled, so I can use it as like a little dual thing. Like, oh, in the past two videos, I said this fair value gap would fill, and then next thing you know, this is a fair value gap video, and here's how we can use this to get an entry, you know? Like, I thought that would be kind of cool. I don't know if you guys would think that was cool. But yeah, what am I doing today? I'm about to go to the gym, about to be a good time, about to lift. And then after the gym, I'm going to take my dog to the dog park. He's gonna have a good time. The 49ers won yesterday. That was lit. But yeah, other than that, like literally nothing else has been going on. I don't really do that much besides lift, play basketball, and trade, and then hang out with friends. Like when people say like, oh bro, like we want to see day in the life, dude, I don't do that much exciting things. Like I just kick it with friends. Like I sit here and talk with friends, like as you guys do. I'm not always like out doing exciting like trading things. Like I don't really know what you guys are expecting out of my life, but since I started this YouTube channel, I've been thinking like, yo, I want to like do like fun things for like each video. So I'm going to try and like do some sort of event thing, maybe like pop out to a concert. That would be lit, but I don't think there's anybody cool coming to this area anytime soon. So yeah, that's honestly it. My shoulder is like dying right now, so I'm going to stop filming. Peace. What's good? Hold up. What's good? I just finished at the gym, about to go home, about to take Boogie to the dog park. That's my dog's name, by the way. His name's Boogie. Two different eyes, super sexy dog, but kind of mischievous and sometimes not the best little skeed. But yeah, we're about to rock back to the dog park. I'll show you him like bopping, playing with friends, and then who knows where we're going next, because like I said, I don't know what I'm doing. So yeah, I'll see you then later. Water buffalo. Downing that. Hey. What you want? Boogie, sit. Sit. Hey. Oh. Lay. Yeah, that's right. Now let me give you pets. Hey. Hey. What? Boogie, you're crazy. Bro, I'm literally pooping. And he has army crawled. Look where his bed is. You see like the edge of his bed over there? He has somehow army crawled all the way over here while I'm sitting on the toilet. Yeah. Like, bro, come on now. He's going to the dog park. He's going to the dog park. He's going to the dog park. He's getting lit. He's trying to get lit. He's trying to suck a dick. Hey. Yo, what's good? That was a crazy transition. That was my first time ever trying that. So right now we're about to go to the dog park. I'll show you some clips of that, show you with Boog, and then like I said before, I have no clue what else is going on during this day. Hope you guys like it. What? Nah, they're going crazy. Hey, turn up. Yo, so we just finished at the dog park. I'm about to get Jersey Mike's, go crazy on it, and then yeah, I have no clue what I'm doing today, but you're seeing it happen live. So yeah, I'm about to get Jersey Mike's, go crazy on the sandwich, and then after that I will probably see you guys tonight, maybe. I don't know, who knows. I don't know, that's for sure. Could I get a giant club sub, please? And then instead of like the regular ham that you guys use, could I do peppered ham, please? Yeah, of course. Thanks. Number 8 with the peppered ham? Yeah. And what kind of bread? Could I do white bread, please? Okay. Giant. Yeah. Yo, okay, I just like took a shower. It's the next day, next morning. About to hop on the charts, about to take my dog out, about to take my nootropics per usual. You guys know the deal. I will see you guys whenever I see you next. You know the deal. Apparently everybody thought this was weed. This is not. This is nootropics. Helps your brain. I don't know. This does not look like weed to me. So, these are all the ones that I will be taking today. The dishwasher one as well. Yeah, I think that's all I'm going to use. Bro, I always like, also peep the setup. Yeah, just in case. Yeah. But whenever I'm like doing this, I don't take Boogie out of his crate, but he just stands there and stares at me like this and cries like a little baby. Like a little baby. Alright, now me and Boog are out and about in SLC, baby. Yeah. We're actually walking over to get me an energy drink because I'm tired. So there's a 7-Eleven right next to my crib. We're walking over. Yeah, it should be a good time. We got tracks going. I just got a Monster. Me and Boog just dipped out the 7-Eleven. Beautiful day. Yo, so he knows a cool trick where I tell him to, Boogie, open the door. He can't do it with this door, but he usually can open the door. Now he's got to take a piss, so. Yo, what's good? It's Thursday morning. We just took a trade. Sorry, I didn't get any filming done yesterday. I was just busy doing a bunch of stuff. But this morning we just won our trade. Take profit 3 was just hit, so I'm completely out of the trade now. Made a lot of money today. It was a great day. Let me think. I don't even know what else I'm doing today. I doubt you'll see like very much of my day, because I'm not really doing anything. I'm probably just going to go to the gym pretty soon. Yeah, our take profit 3 just got hit. Yeah, nothing really else to do today, right? I was just going to trade. It's NFP week, so I'm not going to be trading tomorrow on Friday. And hopefully I have this video out to you guys by tomorrow. That would be clutch. I low-key need to just bang the Fiverr dude's line that makes my thumbnails. Text him and just be like, yo, make me this real quick. And then he'll get it done, and then I'll be able to post this on Friday, which you're probably seeing right now. So hopefully it's Friday. If it's Saturday, I'm sorry, I suck. Or the Fiverr guy sucks, because most of the time I'm just waiting on him to finish his thumbnails. But yeah, that's pretty much it for today. This is the trade that we took. Look at that. Beauty. Beauty. Absolutely beautiful. And look at that dog. Look at the dog. Yeah. But anyways, that's it. I'll probably maybe update you guys what I'm doing like halfway through the day, but not that interesting. This week has been kind of boring for me. Just been doing like business stuff, just getting small things done. But yeah, that's it. I will catch you guys later. Peace. All right, yo, what's good, guys? Welcome to the chart portion of the vid. Hope you enjoyed the day in the life. Each time I'm just going to try and make it better and better for you guys. I think this past day in life, like the video that you just watched, was a lot better than the last one. I was a lot more up to date with it. So hold me accountable. Let's keep these videos coming out. Keep pressuring me, or else I'll like forget to do them. So thank you for all the support too. All right, this video is going to be on how we can spot fair value gaps in the market. We're going to talk about what fair value gaps are, how to spot them, and how to use them for entries. All right, and then I kind of do fair value gaps a little bit different than ICT, and I know a lot of you guys follow ICT in our Circle Trader. If you don't, I highly suggest watching him, because he made this methodology, the fair value gap. It's his. I do not own it. I learned it from him, but I do it a little bit differently than him. Because like I say, you can only be the master of your own strategy. You'll always be the student of someone else's, and I ain't no student. All right, so let's get into this. First of all, if we're looking at
what we said last week would happen, right? We swept this low, and then obviously we pushed up. Today was NFP, so we tanked, right? But we did get our push below and then push up, getting those, getting these swing traders out of the market, right? So first of all, before we go into the chart, we're just going to talk about what a fair value gap is. Okay, so fair value gap is an imbalance within the market. Okay, so oftentimes, you know, sometimes you'll see like a break of support or a break of resistance with a impulse candle, meaning just like a full candle, something that looks like this, right? If we zoom in super close on this, right? This candle right here is the impulse candle, right? Right in here, right? It's just one massive black candle moving down, and then same thing to the upside, right? We can have impulse candles to the upside. Let me see if I can find one. I can't really find any significant ones. I see this one right here, right? It's breaking. It's just an impulse candle through resistance or support, right? The retail trading stuff. So when that happens, it creates an imbalance within the market, okay? Meaning if we go back to this impulse candle, right? Meaning all within here, there's potential orders to be filled. Same within here, same within here. These 3 days, right, all of this is all just orders that could be filled, right? Because the banks entered up here, right? They entered into their shorts up here, right? What does that do? It tanks the market down, right? So there are orders to be filled within here, orders to be filled within here, orders to be filled within here, right? So what are we most likely going to see when market comes back up into these levels, right? It's probably going to reject it or fill orders, right? Fill in these gaps, these imbalances within the market, fill the orders that are resting here, and then change direction or use it to maybe move as a retracement, and then you'll get like another move after that. So like for this one, for example, right, we came down and then pushed up, filled orders, pushed down. Okay, what happens when we get in within this candle? Push up, what do? We wick into here, we push down, right? Let's see if we get anything off here. Not much off of here, right? But we did take out these 2 days already, so it doesn't surprise me that we didn't take out that, right? And that's all fair value gap is. Fair value gap is the orders within these impulse moves, okay? So this is how you mark them out, all right? I'll show you when we go into more examples, but if we're doing this candle, for example, okay, you are going to take it from the previous candle, okay, fair value gap works in 3 candles, okay? The first candle, the gap candle, and then the third candle, okay? So this is our first candle. What do? We take our box, our fair value gap, from the wick, the bottom wick of this candle, to the top wick of this candle, and then pull it over. This is a fair value gap within the market. What happens? We spike up into it, we come down, right? Okay, so by doing that, it helps us, you know, target and label the fair value gap, okay? So we also need to get into, you know, how to use them and when's the right time to use them, right? Because if we were just on the daily chart and we were just saying, oh yeah, like once it comes into this fair value gap, we're just going to sell. That's not really a good plan, right? You need more confluences with it. That's why I don't really like using it just on its own, right? You see fair value gaps all over the place. There's a fair value gap within here. There's a fair value gap within here, right? They're all over. It's just when you're supposed to use them and when the right time is to use them. Okay, so this is a really good example of a fair value gap trade that I actually took. Okay, so first of all, remember our liquidity sweep video from last week? We talked about these highs, right? How it wanted to take them out. What do we get? Remember my strategy: liquidity sweep, break of structure, enter off a fair value gap, okay? I'm teaching you the third building block of my strategy right now, okay? So what do we have? Liquidity sweep, okay? Then what is this, right? This is the most previous low, right? Push up, come down, push up again. This is the low that was formed, okay? And then what happens? Break structure to the downside. Where are our fair value gaps now, okay? Within here, right? Take it from this wick down to here, okay? Where is the other one? Right here, from this wick down to here. Okay, what do we get? A push up into it, sell off, okay? What happens again? Break of structure. Where's our fair value gap? From this wick down to here. You could have even taken it off this, right? Wicked up into it, push down. Another time, wicked up into it, push down. Okay? Filling all the orders within this imbalance, right? And now, on the daily chart, we have this massive fair value gap within here, right? And I was saying last video how I would love for this to get filled, but this was off of news data. So sometimes those fair value gaps don't get filled. Sometimes those imbalances, those orders just don't get filled because it was a news event, right? Okay, let's show more examples on how we could take a trade using this strategy, okay, or using this methodology. All right, it's very simple if you combine it for an entry, okay? So what I really look for is 1, liquidity sweep, 2, break of structure, 3, fair value gap entry, or just a retest of previous support or previous resistance. Okay, so I did not trade this morning because it's NFP week, right? But it did offer us an entry, okay? So if we look in here, right, New York Stock Exchange opens at 13, right? So where's the previous high from London session? Right here, or we can even drag this over right here, right? It's a little bit higher. Remember from our liquidity sweep video, what do we want? New York session open, sweeps liquidity. Okay, let's go down into a smaller time frame. Okay, look at this. What do we have? Sweep of liquidity. Where is our previous low? Right here. Break of structure. Wait for a fair value gap. All right, where is our fair value gap? Massive one within this news candle, right? But look what happens, right? We come down, fill more orders, push down, leg down right here. This is a trade that you can take, right? Short position. Once we enter into the fair value gap, you can just put the stop loss above the fair value gap. What are you going to do? Target previous lows, whatever. We're on the 1 minute chart. I don't want to go deeper, but whatever. Target just like a 1-to-1 risk to reward ratio. Take profit hit, right? And some, right? We pushed all the way down, right? We pushed far off of this. Okay, let's look at some more examples. Okay, let me just start putting on random, let me just start putting on sessions, and we can do what we did last vid. Hopefully this will help you guys out. Ooh, okay. Or actually, we'll just go around and just start spotting them. Okay. So what's this? Okay, 1 minute chart. Okay. Fair value gap within here. What do you see market do? From wick, impulse candle. What does market do? Come within the fair value gap. Boom, sell off. And another methodology that a lot of people teach with fair value gaps is people say this, I don't know how much I trust it, but people say that more often than not, fair value gaps get filled 50%. So I have this GAN box that I changed the settings for. So sometimes I'll set up this GAN box and use this as my fair value gap, and then I'll enter at the 0.5, right? Because that's at the 50%. Because more like almost 100% of the time, fair value gaps will get filled 50% or all the way up to the top, right? So what a lot of people will do is they'll enter at the 50%, right? Just so they can have a better entry than entering all the way down here. Put their stop loss above the most recent high, right? What do we have? Target previous liquidity, 1 to 3 risk to reward ratio, bing bong boom, whole lot of money being made. Okay, let's keep looking, right? So what do we have here, right? So like this, I just want you guys to be able to see these easier, right? We had break of structure to the downside, right? Oftentimes, when you get the break of structure, think about it this way. When you get a break of structure, what does the candle look that usually breaks structure, right? It looks like an impulse candle. That impulse candle is where you want to enter off of, right? Because that's where your fair value gap is. That's where the imbalances are going to be. Okay, let's go to a foreign exchange pair. And fair value gaps are not just on the 1 minute. They're all over, okay? Dog's crying like a baby. Okay. This one, okay? What do we have? Break of structure on the 15 minute, right? Breaking this low, and this low in one candle. Okay, map out our fair value gap. Put it on that wick. What do we do? Fill it 50%, enter at the 50, stop above here, target previous areas of liquidity, target right here, money made. Right, and this isn't even using it in confluence with my other strategy. I'm literally just pointing out fair value gaps within the market, okay? What do we have right here? Impulse move up, breaking resistance, okay? What's within here? A fair value gap, right? This is what one looks like to the upside, okay? Enter at the 15, or at the 50% mark, stop loss either below, this fair value gap, right? Because this still could be a valid fair value gap, same with this one down here. But most of the time, off of a push up, it usually only fills the most recent one, okay? So enter on the 50, stop loss either under this wick right here, or you can cover it down here, okay? What are we targeting? Previous areas of liquidity, target right here, right? Target, target all the way up here, right? What do we do? Take profit hit, a lot of money made. I hope you guys are spotting these. It's very simple once you start like pointing them out, okay? Let's go into the 1 hour and show you how this happens on larger time frames. Or we can even do the 4 hour. 4 hour would be fun. Okay, what do we have here? Push up, come down, push up again. Break of structure. Okay. Break of structure. All right. Where's our fair value gap right now? Right? Impulse move down. Put our GAN box on. Boom. Mark out our fair value gap from this wick to this wick. Impulse candle. What does it do? Let me get rid of this. Okay. What are we going to do? Short at the 50%. Stop loss over previous high or just above this wick, right? Because this is the end of the fair value gap. Okay, what do we target? Previous areas of liquidity. This can be our first take profit. Okay, this one can be our next one. Okay, this one can be our next one. What is that? 2 take profits hit, TP3 on the way. Okay, it's that simple, you guys. Look for a break of structure. You don't even need a liquidity sweep, bro. Like my strategy, like you can take bits and pieces off of mine and make it work for you guys. I'm just showing you how mine works and how I do it, because with a liquidity sweep, you know market's going to be moving, right? You know the banks have induced a move so they can push it in their direction. So we know that we have a bias, right? We have a liquidity sweep. What do we look for next? A break of structure, meaning we are for sure going in that other direction, right? Break of market structure. We're We're changing direction. What do we have next after that, right? You could enter off of just a liquidity sweep. You could enter just off a break of structure. Nah, but I want to be very precise, right? We're trying to get high win rates, right? So what do we need first? Sweep of liquidity. What do we need next? A break of structure. What do we want right after that to get a pinpoint entry, fair value gap off of the break of structure? All right. Let me show you a couple more examples, and then I'll wrap this up because this video doesn't really need to be too long. Okay. What do we have here? Continuation to the downside. Break of structure, right? We broke this low, impulse candle. What do? Draw out our fair value gap from here to here. Okay, fair value gaps, guys, are anytime there's a gap within a wick and a wick. All right. Give me a second. My dog's eating the carpet. No, come here. Wait. Wait. All right. A fair value gap is anywhere between a wick and a wick with an impulse candle in between. All right. What do? Short off of the 50%. Stop loss. Not all the way up there. Above the fair value gap. Okay. What do we target? Previous areas of liquidity. We can target this low as our first one. 1 to 2 risk to reward ratio. Already hit. This is our next one. 1 to 3 risk to reward ratio. Odds are this is going to get hit. Here's another fair value gap, guys. Look. Come up. First of all, there's one within here, right? Here to this wick. What happens? Fill it in the 50, push up, okay? Break of structure to the upside, impulse candles up. What do? Mark out our fair value gap, boom. Down to here. Doesn't fill it all the way into the 50, but you see that it does enter it, right? Gathered orders pushed up. Okay? We're going to do one more example, and then I'm going to wrap this up. Hopefully you guys are getting this. Okay? Let's see. Choose a good one. I'm just eyeballing it. We can do it on the daily. Because that was on the 4 hour, you guys, and I take these trades off of like the one minute, right? So this happened. All of my strategies happen on every single time frame. You can swing trade with this. You can scalp with this. You can do whatever you want with this, as long as you have liquidity sweep, break of structure, fair value gap. That's all you need. Odds are you will win the trade. Like half the time, if I lose a day trade, it's just due to human error. It's due to me spotting either liquidity wrong, that's honestly what it is pretty much every time. It's me getting liquidity wrong and then entering off a false break of structure, and then I'll just lose the trade because it was user error, right? It was me thinking, oh, this is liquidity, but it actually wasn't. There was a break of structure, and break of structures aren't too significant off of a non-sweep of liquidity, at least on a new session open. So, you know, I'll probably end up losing that trade. Sometimes I'll get lucky, but you know what I'm saying? All right. So if we're looking at GJ right now, let's find a fair value gap. Here's one. Okay. What do we have? Push up, come down, breaks this low, break of structure, push up, push up. Nothing, no like impulse moves, right? No fair value gaps within here, right? There definitely will be on like smaller time frames, but we're on the daily right now, so we're just trying to show you that this works everywhere. Okay, but what do we have here? Impulse move down, break of structure. What are we looking for? Boom, fair value gap, boom. From wick to wick, what do? Enter off the 50, okay? Short position, boom. Stop loss, we can either do it, or actually, yeah, no, it is going to be above that high, above the fair value gap high, right? What do we target? Previous areas of liquidity. Target right here, right? Because, I mean, you could target previous resistance, like just in case, right? Target like this area, right? And then what do? Target previous areas of liquidity. This low, these lows, right? They all take profits, getting hit, right? It's very simple stuff, you guys. Okay, I think I'm going to wrap it up there. I know it was a short time. Hopefully you guys enjoyed it. Hopefully you guys enjoyed the day in the life. I'll keep trying to make these videos better and better. Hopefully this video is a lot better than the past one, and then the next video will hopefully be even better. Okay? For the next video, I don't know what I'll do. I'm just trying to keep you guys entertained. I'm trying to educate you guys, really. I'm not here to do like a $1 to 1 million account flip. Right, because that's just unrealistic and that'll cause people to over leverage, over trade. I don't want you guys doing that. I want you guys trading correctly. I want you guys to know how the markets move, right? That's why I taught you about liquidity sweeps. That's why I'm now teaching you about fair value gaps and imbalances. I want you guys to know why the market moves, not know, oh, when these two indicators cross, I enter into a buy. What knowledge do you have about the market if that's all you know? If you know when two things cross, you buy, or when two things cross in the other direction, you sell. Do you even know where market's going to go? No, you're letting the computer do it for you. And guess what? The computer's not good at it either. If the computer was good at it, everybody would be rich. And is everybody rich? No, right? Like if all these little YouTubers, like indicator strategies worked so well, then all their subs would be rich. They would know what they're doing. If their indicator strategies, if their buy sell indicator worked like they said it does, everybody would be rich. But that's just not the case, right? So I'm going to teach you guys how to actually see the market for what it is and how to actually trade it. All right, I hope you guys enjoyed this video. I will catch you in the next one. Peace out.